Now, I know you've heard about the settlement between the major mortgage companies and the government and so forth. Who gets that money? How much do they actually get? Does it really apply to you? That's probably the biggest question that you have. Big Daddy is here this morning, our real estate expert, Bryan Garrity. We're going to ask Big Daddy some of your questions here in just a couple seconds. But first off, do you want to kind of summarize what's going on with this thing again, so that, because you're getting so many calls about this. Let's handle that right now.
I mean, just right off the top, this has probably been the biggest thing that's happened in the last 5 years in terms of people thinking that they're going to be a part of this. So let me go over and break it down, because it's very confusing in terms of who's going to qualify for this settlement. It's a very, very finite number of people. Your loan has to be not only serviced but owned by Bank of America, Wells Fargo, Chase, GMAC, or Ally.
And a lot of folks think that their loan is
because
owned
they
by
take the payments.
Wells Fargo, for example, because that's who they make their payments to.
Right, but that doesn't mean that they own it. So they collect the payments. A lot of the banks are in business of being service providers. That means they take the payments every month. That's a big dollar. That's a big way for them to make money. But a lot of the banks are not the end owners of the loan. So it's very important that those 5 banks are the only investors that have to own your loan for you to participate. It's going to make a lot of people knocked out of the park right from the floodgate. People that have a Fannie Mae loan, Freddie Mac loan, private investor loan, you don't qualify.
Okay, so
that's a big number of people.
Then what happens?
You need to contact your bank. Also, if you were foreclosed on in this time period from 2008 forward, you want to check with your bank. You may be compensated up to $2,000, but you know, every dollar counts, and it would be part of the settlement. The bank should be reaching out to those who qualify or who should be an identified participant in the settlement. But if it were me, I would be proactive, contact the bank directly, find out, do you qualify for this? Because if you do qualify, you may actually get a principal reduction on your loan, a modification. I mean, there could be some good things that come out of it.
There are some folks that will be able to take advantage of this, again, but a fairly narrow range of folks. So if you have those questions, maybe even before you get in touch with your bank, you might want to get in touch with Bryan Garrity. Ask him about your particular situation. Now, you buy and sell real estate. You help folks, you help folks do that. And
all day long.
If it's clean and clear and there's no complications, you absolutely love that. And Bryan is certainly an expert in that, but you've educated yourself far beyond that in terms of the challenges people are facing right now. That's why we asked Big Daddy. Now, question number 1, Melissa from El Cajon, in the middle of a short sale, she wants to remove all of her custom fixtures from the house upon moving. Is that allowable? Uh-oh. You didn't see the look on his face.
No. But let's take this one as a short sale and a traditional sale, because it applies to both. When you sell your house, a fixture transfers with the house. Most people don't understand that.
So fixture meaning it's fixed.
It's fixed. It's attached. It's permanently affixed there too to the house.
And that doesn't mean something that you might be able to unscrew and
take
off.
It doesn't. Ceiling fans, things like that. Right now, I have a deal actually where this is a big area of contention. The house was sold, and the owners decided they wanted to change out the light fixtures. Fixtures do not leave with the house. So if there's
something that you want to take with you, you make that very clear to the buyer. You say the sale does not include.
Correct.
And you spell that out to them in writing?
In writing, yes, in the beginning, especially in a traditional sale. In a short sale, though, most of those items, you can still do that, but most of the items in a short sale should be transferring with the house. That's why the people are usually interested in buying your house.
But there's a lot more going on in a short sale in terms of people already feel like they're being chased out of their home. They want to take something with them.
They do.
And they feel like they're already on the short end of the stick here.
Exactly. Okay. No pun intended.
Yeah, exactly. but leave the stick.
Right.
Okay. Leave the stuff. All right. Cindy from Oceanside, we just got time for one more. Wants to know if the tax protections still apply, and please elaborate.
Oh, okay, yes.
Yeah, so I'm not sure which tax protection she's referring to.
Right.
You?
So my guess is it's the tax protection for those people who do short sales, and there's a deficiency balance that the bank can hit you with.
So the bank allows you, they forgive $100,000, for example.
And then that becomes taxable income because it's cancellation of debt. But I'm not a CPA. I cannot give tax advice. I have to disclaim that. But if you can go on the IRS website, you will see there is a tax pass for those of you who purchased your home. You did not refinance the loans that you used to purchase the home. It's not an investment property, etc. If you meet certain criteria, you get a pass through the end of the year. At the end of the year, it is going to expire. And when that expires, we don't know if they're going to re-up it or what have you.
So if you want to do a short sale and you want to make sure that you don't have a tax liability afterwards, it has to be done this year, and you probably need an expert on your side.
You do, and you need to talk to an accountant, because there are still a lot of possible tax ramifications for short sales. This one area, which is a big one, gives you a pass, but there's still a lot of people that will have tax ramifications.
All right, our real estate expert, Bryan Garrity. Again, if you have any questions, please use Bryan as a resource. Get your questions answered. You might or might not do business in the end, but Bryan is certainly going to point you in the right direction.
Yeah.
So.
Hopefully we will be doing business.
Well,
in the end.
hopefully so. But again, you don't lock anybody in. The advice is free.
No, it's up to whatever they want to do.
All right, Bryan Garrity, thanks as always. For more information, you go to san diego6.com and you click on San Diego Living.